All right, time now for charting futures. And Abigail Doolittle's here, and you're taking a look at E-mini futures around all of the recent volatility. Abigail?
Volatility it is, Romaine. Up, down, up, down. Well, more down than up. But let's take a look at a chart of the E-mini futures over the last 8 days, because this is really the big sell-off that was inspired by the coronavirus tragedy. Net, you can see down 8%. At the lows, down 14%. At that point, the worst 8 days going all the way back to 2008. So lots of volatility. But this week, you can see up and down and up. Let's put all of this into the context of a technical chart, because something interesting is going on here. Of course, folks are wondering from a fundamental perspective, are we looking at a V-bottom recovery, or are we going to have some kind of bearish economic action ahead? This is the S&P 500 over the last year. Overall an uptrend, the buyers in control, but lots of chop, lots of range. There's the possible V-bottom, but it could also be bearish congestion. So you really want to watch levels. If above the 200-day moving average, the greater the chance that it will turn into a V-bottom, perhaps back to the highs. There may be more signals, though, that it is bearish congestion. That would be confirmed below the 200-day moving average. Then you want to watch 3,000 and then the low made last month or the high made this month for a move higher. Lots of uncertainty here, lots of volatility, huge moves. Volume at the highest since 2008. The bulls and the bears really duking it out, looking for more fundamental news around the coronavirus and what it will mean for the global economy. To talk more about the E-mini futures, somebody who only trades S&P 500 E-mini futures, Eric Dugan of 3D Capital. Thank you for joining us as always. And what do you think of that chart? So much volatility, uncertainty.
It reminds me a lot of 2008. You know, I sit
It
there and
does.
I watch it every
Me too.
day. And yesterday we had 15 intraday swings at 1.5 or 1.75%.
Yeah, surreal.
So that was, literally trading 30 and 40 handles every 5 minutes in either direction.
Yeah, and if you recall, in 2008, well ahead of the fourth quarter volatility that year, there were huge swings up and down, but always lower highs ahead of that big volatility. So perhaps more to come, but you really track, before you trade the E-mini futures, global futures. In this case, we have copper, oil, and the S&P 500 E-mini futures.
Yeah, so what's interesting about this is, you know, we talk about the global relay race, and that could be anything in the world. In this case, in January of 2020 and February, up until February 19th, which was the all-time high in the S&P, we had crude drop over 20% off its high and copper drop 15% off its high. So if you look at the blue and the white line, you can clearly see copper and crude it was about down 11% and down about 7% year to date. The S&P was still up 4.5% at that time.
Yeah, that's something we've been tracking too, that split between
we were just
commodities
looking
and
for
stocks.
confirmation, and we finally got that confirmation on
In spades.
Yeah, so on February 19th, we had a new all-time high in the S&P. The February 20th was the largest trading range of the month of February. We dropped 1.5% off the high. We dropped another 1% the following day, continued to make lower lows, and clearly evaporated after that.
So let's now take a look at bullets on why you trade just the E-mini futures. And this is actually the S&P 500 with a little bit more detail on that bearish day.
This is important, Abigail. The bottom here, February 28th, we talk about net change and open change. The net change on February 28th was actually down 20 basis points. Open to close, we were up 2%. We've skyrocketed 10% off the lows on that Friday.
Incredible. So now let's take a look at some bullets on why you only trade E-mini futures. I don't know anybody else who does that.
Clearly, we've discussed the low margin requirements, liquidity dynamic is one thing. So being able to be long one day and short the other and take advantage of the daily narrative of the market is one of the keys.